Okay, welcome back to the Millionaire Incorporated Forex Basics Trading course, Module 2 on charting. We're now going to dive into Part 5 on supply and demand. So what we're going to cover in this part will be the principles of supply and demand, how to identify supply and demand zones, and the validity of a zone. So this is the tool which I use most often, and this works on the basic principle of economics, which is supply and demand. So if there is a demand for something in the marketplace, that means that there is more people wanting to buy that product or that service. And as a result, people rush in to buy more of it or use that service more regularly. And over time, this pushes the price of that higher. So if there's an oversupply of that product or service in the market, that means that there's too much of it present, and people either don't need it or services start offering it at a discounted rate to get more billing, more clients. So they pushes the price of that product or service lower. So the same thing works in trading. So an area of demand sees a lot of buyers entering into a market at a certain price, driving the price of that pair or product higher. And conversely, for an area of supply, there is a lot of sellers coming into the marketplace and placing a lot of selling pressure on the currency pair and pushing that price lower. So, and how I use them, I use the supply and demand to look for trades from areas where prices made a very large move from. So if prices created a demand zone, you will see an area where prices either retracing down and all of a sudden makes a very large, strong move higher. And what this does is it creates like a liquidity pool of buy orders that hasn't been filled yet. So that when the price eventually comes back down to that area, there's a high probability that price will move higher again. And the opposite is true for supply zones. As price is gradually moving upwards, if it makes a strong, sharp move to the downside, it has created an area of supply. So when price eventually comes back or retraces to this area, there is a good chance that price will move back down to the downside. When it comes to supply and demand, we look at placing trades of what we call zones. So it's not just like an exact price where price will move down from. It's an area where price has created that liquidity pool to either move down from a supply or move higher from a demand. So the larger the move up or away from a certain area, the stronger and more valid that zone. It is suggested that this is what a lot of major traders, as in banks and financial institutions, use to trade, because they have buying and selling power, and that when they place trades, they are usually placing large orders and make the financial markets move in a very rapid fashion. So they can also be referred to sometimes as institutional levels. So to now take things a little further with understanding these areas, there are a few factors to consider. We always want to be trading with the trend. So how do you know which direction the market is moving? With supply and demand principles. You want to look for zones that have broken the opposing zone. So say the market structure has created higher highs and higher lows, so it's in an uptrend, we'll be looking for longs. So this also means that there has been a demand zone that has broken the opposing supply zone to do so. So that when price comes back to this demand zone, we will be looking for more buyers to trade with this trend. So you also want to look for zones what we call fresh zones. Now this refers to supply or demand zones that haven't been touched before. So price has moved away cleanly from the area and price hasn't really come back and touched it again yet. And this is because it's highly likely that there are more unfulfilled orders left in this area or zone that still needs to be fulfilled, so price will move back in the direction that it made the large move from. So from the example just before, where we were looking for demand zones, we want to look for a demand zone which hasn't been touched before, so that price has made the move away to create the new higher high, but hasn't been touched with a retrace yet. So you want to look for zones within the higher time frames. So you want to identify a daily or weekly supply demand zone, and then work down to the smaller time frames to look for fresh zones within these areas. And once you've identified fresh zones within a higher time frame, you can mark the zone and wait for price to come back to that area before trading with it. And you always want to look for confirmations before entering into a trade. So in the sense of a supply and demand, you want the opposing zone to be removed as it approaches the zone of interest on the lower time frame. So if you're looking for shorts from a supply zone, you want to make sure that the opposing demand zone has been removed as it comes closer to the supply zone you're interested in shorting from. So you want to do this on the smallest time frame that you want to make an entry on. So example, you identified a supply zone on a daily time frame and found a fresh supply zone on the 4-hour time frame that you want to enter on. So while price is coming up to this area, you want the opposing demand zone removed before it comes to this supply before you sell. And also remember, the larger the move away from an area, the stronger the zone is. So if the move away is sharply move, so if the move away is a sharp up or down with large candles, it'll be highly likely that when price comes back to this area, that a similar thing will happen again. So here is an example of a supply zone. So as you can see with the orange rectangle there, price has kind of made one small green candle up, then all of a sudden had a couple large red candles move straight down and taken out all the opposing zones. So this is what I mean by opposing zones. So you can see how it's kind of created like a small kind of demand zone here as well, and here as well. And this supply zone has just rocketed straight through all of it. So most likely when price comes back to this area, won't move as sharply down again, but it will definitely move down depending on the overall trend of the price action. And here we have a demand zone. So you can see before it's made that move upwards, as you can see it's made a pretty decent move up, it's created like this little called basing here. So it's had a red candle before it's actually moved up and then just continued upwards. And it's broken through these opposing kind of supply zones. So let's take a look at an actual chart to get a better understanding of this. So here we have the daily chart of the pound yen. So what I'm going to look for first is on my daily time frame, an area of interest. So I can see here, I've actually already looked at this chart earlier on, that this area here has made a sharp move down, taking out all the previous kind of demand zones as it came up. And as you can see as well, all these as it came up weren't fresh at all. So they'd all been tested, and even this one has probably been tested. So I'll mark this area just here as an area of interest. So I've actually reconfigured my Fibonacci retracement tool to be a supply and demand kind of tool as well. So I take that there, highlight this area here as of an area of interest, and you can see just on the daily, as it came back up to this area, it's dropped down again. So if you want to find an area of an area to trade from, a fresh area to trade from, we'll drop down to the 4-hour chart. So let's just reconfigure that. So this is where I kind of reconfigure my charts a little bit. So I can change it to this being this area here where it's actually made this very, very sharp move from just here. So you can see that when the price actually initially comes back up to this area, it drops all the way down, takes out that small basing, all these small candles here, which have created what we call basing as it comes up. As it comes back into this zone, it makes a much larger, sharper drop down. So you can see that makes a significant move to the downside there. Then you can also look at other areas which have other areas for supply and demand zones here as well. So you can look at this area just here as it's come back up. We'll mark this entire thing right there. It's come up, got moved away from that area, came back up, touched it, and just dropped again. So that's all for trading with the supply and demand zones. Stick around for the next part.